Good morning, everybody. Welcome to the Flow Show. I think I'm speaking and online this time around, checking all my buttons. They're all working. So here we are, Friday at last. Been another long week. Well, it's been exciting in parts, but certainly a bit quieter than last week, but plenty going on and lots going on in the world. So lots to chew over this morning. Morning, Kate.
Morning, Ryan. Morning, everybody. Thank God it is Friday.
Yep, looking forward to it. And for those that do not know, there is an unofficial market close today for for the UK, Europe, and the US at 12 o'clock GMT, just over an hour and a half's time. So just as the US will open, it will close again because the golf's starting. So it's going to be could be a pretty dull affair in markets for the rest of the afternoon. Orange people and the likes aside, dropping truth bombs everywhere. So just be prepared after we've got all the data and everything, particularly later today. We could find the markets paying attention to other things. Certainly I will anyway. Right, before we crack on, our sale and the TFP, or our special offer on the TFP, is still running, as you can see on the screen there. I'll just pop a link to that in the chat. That runs out on the 28th, I believe, or the 29th. Can't remember which one. Let me check the calendar. Yeah, so is it 29th, is it?
That's what I meant to have understood, but I'm not 100% sure.
Yeah, can't remember. Anyway, it's not going to last long, so be quick or be dead, as we like to say. So get on that offer for the TFP, 30% or 50% off those plans. Use those codes on the screen. They're going to be there. 3, 2, 1, gone. But if you want them, you'll see various tweets and whatnot around anyway. Right, let's get cracking on what's going on. Going to start off with some data and not particularly good data for Japan. So firstly, we had the Tokyo CPI. CPI coming in unchanged at 2.5%. However, it was the core measures that has the most worries. We've got one core measure there that came in at 2.5%. So was expected to go up to 2.8. But so came in unchanged. There's another CPI measure there, 1%, which is obviously down on 1% previously, year-on-year measure. Now, it was in the core measures where the damage has been done. The ex-fresh food came in at 2%, was expected also to go up to 2.8%. And the core, the ex-fresh food and energy came in at 2.5%, was expected to rise to 2.9%, or which would have been a pit down on the prior month of 3%. So we've gone from 3% to 2.5%. So some of it holding up, but some of those core measures coming down, which isn't good news. What is also not good news is those real wages we've been banging on about that dropped at the beginning of the month, July numbers, that 0.5% real wage gain, which was looking very positive, got revised down to minus 0.2. So yet another case for the Bank of Japan where they take one step forward and two steps back towards a hike. Now, this is just one city. It's not the national numbers, but it is the early indication on inflation. The wage data isn't good. Inflation is staying above target, though, which is a tick in the box for stable inflation, which is what the Bank of Japan want. But Kate, does that data eke out a little bit from our expectations of a hike soon?
Of an immediate one, possibly. It's crazy that none of the statisticians or people collecting information can print the right numbers straight away, and it's all around now, even in Japan. Help me when it will get it to Germany or Switzerland. Yeah, I mean that wasn't a good news. Even let's say the ex food and energy number is always a bit of a strange one, but Yeah, it doesn't help Bank of Japan to make a decision on the next hike, where actually the expectations were that they may be pushing for one come what is it, the next one? I'm just looking at my sheet
End of
quickly.
October, isn't it?
It's 30th of October. Yeah, I
Yeah.
think it was like firmly on the card, especially if they can print positive real wages. But yeah, now we will have to see what the rest will bring. Yeah, the
I mean,
national.
that is a shocking revision. I mean, even if it dropped to up 0.3, you
Yeah,
think, okay, a bit weaker, but to go negative, which
yeah,
keeps
and
it,
I
I think,
mean,
7 month running negative.
it's a real surprise that they have such a big revision actually.
Yeah,
I don't know where they got their original numbers from. But it is so that maybe they do a first round of all the bigger companies, and then they drill down to the more medium and smaller ones, where life is completely different than in the big companies.
yeah,
Um, that is possible, but yeah, it is, as you say. I mean, it is a big revision and not helping the Bank of Japan to pursue with rate hikes. Yeah, but as you can see, I mean, and it's. I was thinking about those statistics and numbers collections. Look just below there. Even the Singapore can't get their numbers right
yeah,
on industrial production, etc. Look at those variations. I mean, what's going on in this world?
yeah. Oh, I mean, to be fair, it's probably all, Trump related, all this tariff related and everything. But yeah, it's, who knows? It's just crazy. Some of the numbers we're getting at the moment. Yeah, lots of questions over, data collection in this age of AI, where people are still relying on bits of paper and phoning up people to find out what's going on. So maybe something needs to change. Probably going to be heading that way at some point. Anyway, let's move on. Just a note from the Ryanair CEO. That's a budget airline here in UK, Ireland, and flies across Europe. Says they are seeing stronger forward bookings, which are 1% ahead of last year, and we're getting close to a 7% increase in fares. This is a potential indication that the consumer, particularly here in the UK, Ireland, is looking fairly strong still, and willing to spend and book holidays well in advance. But also, airfares are a big part of the inflation metric as well. So a 7% increase in those year on year. I think it's already had a bit of an impact in prior inflation numbers here in the UK, but that will be adding to the fire that the BOE is trying to put out at the moment. Over in the Eurozone, the ECB were out with their latest inflation expectation survey. 1 year inflation is up to 2.8%, was expected to fall from 2.6 to 2.5. So people starting to think prices are on the creep again. 3 year expectations stayed unchanged at 2.5. They were expected to fall to 2.4. Data from yesterday, and well, really, it was a stonker of a day for the US. And if dollar bulls needed any more fuel for their fire, they certainly got it. Where do we want to start with this one? GDP final numbers. I said we don't really pay much attention to those unless it's a big variation, and a big variation it was. 3.8% the final number versus 3.3% forecast and the prior flash, which was up from a prior quarter of down 0.5%. So real strong finish there for Q2. Yes, it is old data, but you can't ignore that number. Durable goods, 2.9%, was expected to fall 0.3%. Another big one. And what was good about it is you take out all the big ticket items, like defence, as it says there, which rose 1.9%, and transport as well, which came out, have I got the numbers here? Yeah, which came out up 0.4%. The capital goods orders number, up 0.6% as well, was expected to come in flat. That's a good investment metric. and core durables as well. They're up 0.4%, was expected to fall 0.1%. Jobless claims as well, 218,000, a very low one. Continued claims also staying there or thereabouts. Very, very good numbers, Kay. Can you just explain those numbers away? I've just got to get the doorbell.
I thought I heard your doorbell ringing.
Here we go. You take it over.
Yes. So on those claim numbers, where it was expected to stay around those 230 levels, the initial jobless claims came in below, where there's always a bit of a worry in the market that we may see higher numbers on unemployment data to measure with all those layoffs, etc. But it's rather the hiring and the firing also that there's less firing as well, so that may have had an impact. But then I think the continuing claim numbers who continue to gradually tick down, they are also adding to the positive one. And what I really yesterday, what sprung out to me, you're back, Ryan, if I understand, because I see your screen moving. But what really stood out to me yesterday was that real consumer spending in Q2. Okay, it's still a backward-looking number, but it has been revised quite a bit higher than what the expectations and the flash numbers were in there. So that is still positive, and that is something that Fed is watching, especially. We should be watching as well, because the consumer is obviously a big driver of growth in the general term, and that was a really good number there as well.
Yeah, absolutely. And even the trade balance, the deficit improved. Yeah, you're right.
Hang on. The trade
Your
balance.
doorbell.
The trade balance. If you look into the details, there's a.
I was just about to say, yeah, it looked good on paper, but there was a big drop in exports and imports. Imports fell 7%, and exports fell 1.3%. So yeah, good on the outset, not so good on the activity front.
Yeah, absolutely. I mean, we always have to look at this. This is what we always say on the shows. If you see a good number, especially, and trade will be important because everything is going around in trade. I mean, Trump sent us a gentle reminder last night as well. But it's always important to look at what's going. What are those numbers? What are driving those numbers? And that -7% on imports. That's something, but it will probably have to do with tariffs as well, if there is enough clarification, or if, for instance, those pharma things are yeah, I mean, like Europe already said, well, we negotiated the pharma tariffs at 15%, not at 100. That may pick up again, when there's more clarity on all those numbers.
Yeah, I think we've still got a bit of pendulum swinging in those numbers, just from all the trade stuff. You hold 1 week, 1 month, and then next month you might need to ship a load of stuff in, and then you don't need to do it the next month. So yeah, I think this trade data is going to be messy for the foreseeable with all this stuff. Galaxy, yeah, outside of employment, everything else would say no more rate cuts. Absolutely, and we could heat up inflation again with tariffs and economic strength. Absolutely, mate, and that's something I've been saying. If the economy remains strong, it's naturally going to bring inflation with it, because that's what economies do when they're hot. People aren't scared about putting prices up. If you're making good money, if wages are up, it becomes a bit of a self-fulfilling prophecy. The same way it can go the opposite way, which is what you're seeing in the likes of France, which have got low growth. And they're cutting prices, as we noted in the last PMIs. Firms are cutting prices to try and entice business. That puts you into a negative spiral, if you like, self-fulfilling, which means you get weaker and weaker as you go chasing business, and people haven't got money. So, yeah, it's always a double-edged sword, and that's the conundrum the Fed has to deal with. If the economy gets strong, then they're going to find sticky inflation. And if the jobs market does roll over, well, that's a position they're going to be stuck in. But if you've got an economy going as well as the US is, you shouldn't expect the jobs market to roll over. But you know, it's I think the fence that the economy is walking along is quite thin, so it could still go either way. Ali, what am I ignoring?
Breakfast time, I think.
Yeah, okay. Right, moving on. More data after that. We got existing home sales coming in at 4 million, beating expectations, although it was a million down. 10,000 down on the month before. So we'll call that a small negative. Prices, though, holding up 2% from last year, up 0.2% from the prior month. Fed Goolsby came out with some choice comments. Says the jobs market seems to be cooling and inflation is going up. Says he's somewhat uneasy with front loading too many rate cuts based on jobs numbers slowing. Obviously, with that data he's just seen, he's got a bit of a point about front loading too many rate cuts. But Mr. Goolsby, he likes to sail around in a wind quite often. He's always one side or the other and switching back and forth. Anyway, Fed Schmid says currently the Fed is close to meeting its mandate, but policy must look forward. The rate cut was appropriate to offset risks to the labour market, but recent data points to rising risks in the jobs market. Fed's Bowman on the waffle again, I think second time this week. Says data used by the Fed hasn't been as accurate as they'd like. No shit, Sherlock. Fed's Logan says the time has come to modernise the interest rate target system. We should move to target a tri-party general collateral rate. I'm not even bothered to look into what that means on a Friday. Kay, what does that mean? Tri-party general collateral rate.
Tri-party general collateral rate.
Yeah.
Can I come back to you next year also on that one?
Yeah. 2028, please. I need an answer. Anyway, this is all part of the Fed looking at how they do things over the months, year ahead. So there's probably going to be loads of stuff floated. Anyone who's in our Zoom chat knows what that tri-party general collateral rate is. Feel free to let us know or forever hold your peace. Right, we've got this stuff going on with Fed Cook. She had to submit some whatever crap to the Supreme Court by yesterday, which she did. Obviously, trying to not get tin tacked, as we say here, sacked. But we also had a raft of ex-Fed heads and Treasury heads signing a what's called an amicus brief, whatever that is. It's sort of like a testimony, I suppose. And they warned of economic peril if Trump manages to fire Cook. So make of that what you will. All the press I've been reading have sort of been intimating that a decision is potentially coming soon, though I've not read a single date being put forward as to when the Supreme Court can rule on this. So I don't know if it's a scheduled thing or they're sitting in their halls of power deciding and then they're just going to drop the decision on us. So it is potentially a bit of risk, headline risk, to keep an eye out for if it comes today or early next week or over the weekend. I don't know how they do these things. So just be careful of that. Banxico, they cut their rate 25 pips as expected, and at 7.5%. There was a dissenter again, Jonathan Heath, wanted to keep rates unchanged. Statement, still keeping door open to further moves. Kay, I know you looked at that in a bit more detail. Anything of note?
Yeah, no, still nothing. Still leaving the door open, as you say. They're not done. The statement was pretty much in line with last one. They actually revised inflation a tad lower, that's the projections, right? For inflation a tad lower, where last month the last meeting they took it a little higher. So it was not. I didn't see too much hawkish in it, but it's like most of the central banks right now, it's 3 pages of what they could have said in 2 words, being data dependent. And that's exactly where they are at. A bit uncertainty on the global economies, et cetera, whatever. I mean, that is it. Really, nothing much to see. I do think that the market, we saw the move in the mix prior to the Banxico, and once we got it, I don't know, maybe insiders also were expecting them to be a little more dovish. But as we have seen over the data of late, I think that the direct investment wasn't great, but all the rest, there is nothing really overly overly bearish in happening in Mexico right now. And as we know, Scheinbaum, Ebrard, they are trying very hard to stay on the right side of Trump. So I think it was a bit of a buy the rumor, sell the fact on the dollar mix, which we saw yesterday.
Yeah, yeah, possible. We'll also, with all this dollar strength as well, that could have been just a little bit of a stop run
Absolutely.
through the figure, a little bit of a clear out. Very telling, could be very telling that we're back below that level
Yeah.
soon after.
Well, let's hope so.
Yeah, there's a couple of us who are a little bit short, just into the top of that zone. Yeah, I don't think I'm going to hang around in it though if I see 1840s. But the dip thus far is very shallow. So it's
And it's a bit of a
yeah,
day today. Huh?
it's what?
It's a bit of a danger day today, value date,
Yeah,
month end. We see a bit of US corporate action. They could take it up there again. But so far, it looks like a bit of a follow the leaders, the rest of the
yeah,
dollars, and then a bit of a stop run. Probably people putting their stop above, just right above 1850, getting done. But yeah, so far so cooling off. Let's hope it stays that way.
yeah. I can't see it getting all the way back down to the bottom unless we get some headlines or something.
Not today.
But yeah,
Not
if
today.
I see 1840s, I'll probably chop it in before the weekend. But let's
Yeah,
see.
I've already scaled back quite a bit. So I mean, my risk is extremely limited, let's say, and even if I get done there above, I think my stop is at 1860 right now. But I might even like just live step out of it and then see what happens after 4 p.m. also today. And yeah, and
Yeah.
then advise. It's nothing. It is not like a huge conviction position either.
No, just a bit of a tech play, a bit of a range play. Yeah, I had a little snip off yesterday. I'll see if I can get a bit more off. But yeah, I'm not. I've still got my core short, so happy to sit on that while we're below. But let's see what happens. Right, well, here's something that could upset the apple cart because Trump has got his tariff hammer out again. 25% on all heavy trucks made outside the US. 50% tariff on kitchen cabinets and bathroom vanity units. So if you're looking to do your house up and replace some stuff, you want to be doing it this weekend if you're in America. 30% tariff on upholstered furniture. So everything in your house is going to be going up. And 100% tariff on all branded and patented pharmaceutical products. All this coming from October the 1st, giving everyone a nice 4 days to get their houses in order for that. So, yeah, more tariffs coming. A lot of countries scrabbling around to find out what it means for them. Japan, Switzerland, a lot of countries trying to work out how much this is going to cost them, and then we're going to go through the same old hoops of trying to get deals done and whatever. White House is, yeah.
About that, the thing I found interesting about it was his next through social bomb saying that it could be if you're building or breaking ground and under construction, you won't be paying the tariff. So that's why I said, like, so as long as you buy an empty plot or an old factory and you plant a shovel in there with your name and put a sticker on there under construction, you shouldn't be paying tariffs. It's a bit strange, right? Ah, you've gone silent again.
Yeah, no, I'm here. I was going to say, yeah, good luck. You got. If you're in America, you got 4 days to sort this shit out, and As long as it doesn't happen over here, because there's no way the wife is dragging me around IKEA. I hate the place. Anyway, right, let's move on. We had White House's Hassett saying we have made enormous amount of progress on China trade talks, but there's still work to do. I've found it really funny that the biggest win Trump has so far from China is TikTok. That's it, 9 months, and all we've got is TikTok. Crazy. Anyway, on to the Ukraine-Russia stuff. We have had a big step up in language, even from Europe, which has probably been the most surprising after Trump's comments that NATO countries should shoot down Russian stuff if justified. NATO's RUT acknowledged that too, saying if necessary, there is a right to shoot down Russian incursion jets. German Chancellor Merz said that on repeated violations of airspace, we will not allow these attacks to continue and will take all measures towards an effective deterrence. European officials have apparently privately told Russia they are ready to shoot down jets. So this is all just picking up a little bit now. The heat has been turned up a little bit on all this. Let's see if it does anything to stop Putin getting up to his fun and games, or if he's going to try and call their bluff and see how far Europe is ready to react. If they are ready to react, we're in for a big risk shock if that happens. So be very careful. Anything could happen. If he flies something and someone decides to take a pot shot, it's going to hit risk pretty hard, I should think, even though it's been touted that that may do that. Talking and doing are two different things when it comes to market moves. While we're on that, apparently, according to a story, the European Union is going to discuss a 140 billion loan for Ukraine that will come from frozen Russian assets. It's about time they wielded that hammer, in my opinion. They've frozen all these assets for months and months and months and months. If you're going to put the pressure on, start using them. And again, that's another bit of a jump up in rhetoric. Kay, this Russia stuff. I mean, we have these ebbs and flows. Been saying the last couple of weeks after Trump sort of washed his hands a bit, something needs to step up, or it's going to carry on, and it looks like it's stepping up.
I'm afraid it is, and I was just thinking about that. Is it not going to mean that just for us traders, that ahead of the weekend, people won't want to keep any risk positive positions in the books? But because it's starting to be a real risk there, Ryan, right? And the thing is that Russia doesn't stop, and then they react by saying like, "Oh yeah, if NATO does something, that means war." Yeah, but they are pushing for it like very, very, very hard, and then it made me think as well about that meetup that they had, Putin and Xi and little fat boy in North Korea, and he now made a bit of an incursion in South Korean waters as well, and it all seems to be part of like, yeah, I mean provocation is ramping up, and at one stage, you've already been saying as well. I mean, Europe has never reacted to those kind of things. But at one stage, NATO also, they might have to do something, right? Because we only see stuff now reported that overnight that Russian spy ship again trying to go and know exactly where those underwater sea cables are located, and so we can expect a bit more sabotage there, right? And it's not a good thing, right? It's not heading the right way, and that brings us back to all those negotiations. Zelensky yesterday also ramping up tensions a notch, but they're just obliged to do so because there's so much provocation going on.
Yeah, and it's always the stuff we don't know that's going on that I'm sure governments do know about. We know about the odd ship and flight, but what's going on under the sea, subs and all the rest of it, and yeah, there's probably lots of stuff we don't know about, but it is ramping up, and as I say, we can probably sure as hell expect a big market impact if we see something like that.
Oh yeah, definitely.
So yeah, just might be worth looking at those sort of risk trades if you're sitting in anything. into a weekend with all this going on, might be wise to hop out. You can always get back in on the Monday if nothing has happened. But yes, be very careful with your trading, and certainly wouldn't be short in gold in with those headlines potentially coming. So yeah, just take care, traders, as we always want to tell you. Right, that's it from the news for this week. Unless you've got any final things, Kate?
Good enough, mate.
Yeah, cool. Well, we can crack on. Right, Fred wanted to know about dollar yen and euro sterling. So we're going to start with dollar yen. Very good move yesterday. Very decent move. This break of this levels down here, very, very strong. We had a little half pause up at these prior highs, and then we just carried on motoring up. There wasn't really an awful lot in the way that I had anyway, apart from these sort of prior highs up here. But we carved through those. Even got up close to 150. I've got a 149.95 print on my screen, so very close to that 150 mark, where we're obviously going to find some resistance into such a big figure, psychological level as well. Is a prior trade point as well, so we've seen plenty of action around there. The pullback thus far isn't very strong, dipping down to 65s, 64s. So we're keeping a very bullish tone in here today. If we break this 150 today, that's going to look super bullish. And if we manage to close above there, we're probably going to be on for a run up to the 151 and that prior high there. Even just staying above 149s at the very least above that 148.80s is still going to be a very bullish move. Yeah, maybe a bit of risk. Maybe it's a bit of month-end stuff. So, it's rallied. It's got to keep the rally. If it folds after all this end-of-month stuff goes through and we're back down here, that'll tell us exactly what it is. And then the picture changes again. But there's lots of things going for the dollar at the moment. It's had a big old kick in this year, and it's trying to get some of it back. Dollar yen's been obviously a bit up and down, but you look at your euros, your cables, where it's been pretty much one-way moves all year, and now we're starting to see a bit of a fight back for the dollar. Euro sterling, that's still on the mooch. We're stuck between the prior highs and this 87.20s. So far, not much to report in this one. But really, if you want to look for direction, you look for a move out the top of these highs. Although up the top, I've got a bit of an old zone that goes back quite a way. Oh, if I get it on the right chart, it's going to look a bit messy, but you'll get the picture. So just a bit of a traffic zone goes back to November 2023, and throughout this period as well, we've seen action through this zone. So keep an eye on that one. But really, whatever way we're breaking up above there or back below 87.20 is probably going to have some legs for some sort of move. Might only just pop down to the 87 figure, or just pop up to 87.80, something like that. So this one still looking bullish, but it's got a bit more to do. Dollar CAD, that's another one looking very strong. Again, another decent move yesterday. We got the break of this level here, and we managed to truck on pretty much another 90 pips. So a very strong move. We cracked above these levels. We had a little hold up here around the figure, around into some of this area here. Then we had the break, and it just carried on motoring, carved through the next level, and it's got up again, another long-term zone. This one goes back to late 2024, just around, as you can see. It's a bit not clear, but you can see we've had a bit of action around here, and if you go into the lower time frames, you'll see that in there as well. So a bit of a zone, but it's all eyes on the 140 level from here. Big level, got the fib up there, got the 200 DMA up there as well. So this is going to be massive. So this is another one that's had a big fall all year, but it started its bottoming pattern much earlier than we've seen in the likes of the euro. We were plotting this all the way through. You knew about this structure, that structure, and it's kicked on to the upside. So still looking very bullish. Again, where we close today, as long as it's above 139, it will keep that picture looking bullish. Kay, I'm going to pass it over to you, mate, to finish up.
Yeah. Gonna look at just a few, and it's. I think it's important to, in regards to what we spoke about just a few minutes ago, risk, etc. To look at what the metals are doing, and then gold here, which will be, even though silver has moved a lot faster, but I think for different reasons. Gold is still going to be one that we need to watch out for. Look into the weekend, regardless what may happen on the dollar, or going into the fixing US corporate demand or whatever. I doubt that this one is going to make it too far lower and going into the weekend, because this really risk, geopolitical risk, is has ramped up a notch as well. So I wouldn't be surprised if gold, even if we see dollar demand elsewhere, potentially, you never know. But we could actually, I think, just edge towards maybe the top end of the latest range again, going into the weekend. I would for sure not go short in this one, looking for deeper corrections. By the way, the correction that we saw. So this was on Wednesday. This was yesterday. We can't even get down to that 37.0510, 37 figure 10. It's really still very very big. So unless we start to get below this 3700, I think there's still not many reasons to start looking for a deeper correction. Now, what happens on Monday is a different story, of course. If everything remains quiet, or if by any chance, which is a very limited possibility, I think we get some sort of thaw. Then yes, we could see a bit of a retracement. But until the weekend, um, I wouldn't really sell it. Now, silver. That was even more spectacular yesterday. Yes, we had this retracement that we saw when the dollar came bid after the data. Just like any other dollar pair, it went down. But the reaction that was afterwards was pretty spectacular, and just telling me that. And I wonder whether it's like contracts to be honored. Such a short supply being, and people needing just the silver, the physical, whatever, to do something. But those moves are just more than speculative moves to me. There's a lot more going on here than what I think. And going back onto the long term, this level here, 45.40, 40.45, long term fib 88.6. It could explode even before the week is over, and we could have a look, maybe into next week, um, into this zone here. I'm not sure whether we can reach 50, but it certainly looks still very, very, very explosive. We can't really expect a real retracement starting for as long as we hold above these lows here. I would say for as long as we're above here, we have seen those setbacks like half a buck, but for as long as you don't start to break prior lows, it's useless to look for a retracement. Now, can it happen? If it has to happen in time, I would say maybe if there is some truth in contracts to be done or whatever, maybe after the end of the month, we may see a retracement starting. But for now, really, I don't want to go against this move. This still looks too impulsive and too, just supported in time, as I was showing yesterday. I mean, this retracement was a very short one, right? Very shallow one. Yeah, it lasted a couple of hours in sympathy with the rest of the dollars, but then it took like just as much time to go back up and even higher. Um, a couple of more, and then I think we're not going to run through the whole spectrum. I've done that already and Ryan as well in our chat room for those who are there. A few interesting levels here. Aussie all of a sudden lost a bit of its shine. Yes, we had a setback in the equity markets. We had potentially that geopolitical risk and Aussie, Kiwi commodities, currencies, they need positive news to continue to be attractive. Yesterday, all of a sudden, Aussie lost some of its appeal, and we crashed through all those little horizontal supports here. Well, actually, not that little, decent horizontal supports, and we are now trading bang on the 61.8 of the August into September rally. So it is quite important. Reckon with some more potential, as I said, if they have an interest, US corporate activity. So we could go for a little walk lower still before the week is over, and then we will see what happens after, for instance, that London fixing also later. But fact of the matter is that it all of a sudden lost quite a bit of its appeal. We are going to have to closes above this 65, 50, 60 to take the pressure off. Okay, if we get a close above 65, 50, 60 to close the week, at the close, then it's looking a little bit better. But still, there is weekend risk, and since those are also related to risk, those currencies, it is still feeling a bit risky going into the weekend. When you're a weak link, it lasts, and the Kiwi just dropped like a stone through 58. And as I said, if 58 goes, there's a potential for a quick run down to the mid 57s. That's what we had. That's where we still are trading around 57.60 right now. This is a bit of an area to keep an eye on. 57.50 down to 40-ish, but I'm not ready to catch a knife there yet. In this one, it still looks pretty weak for me, and there's not a lot that tells me for now that next week may be something different, but there's not a lot that tells me for now that this is really ready to catch a knife in. Okay, and then really the last of the last cable. That's going to be an interesting one for the for month and etc. Because we made this excursion and we're still trading a little bit below this 133.65 again. That is one that we need to monitor to close the week. 133.65, stretch it to 90. That's going to be an interesting zone to watch to close the week today. Okay, we did go back to those levels yesterday, even a little below, but trying to shyly bounce a little bit. This could do, in my opinion at least, this could do something like this afternoon, perhaps, depending on the data, and then maybe start to recover just a little bit at the expectations for month end and quarter end taken into account. Back over to you, Ryan.
Before you flick off, mate.
Yeah.
Oh, you flicked off.
No, I'm still there. Tell me.
Yeah, I was going to say, I think what a lot of traders need to look at in all these is a bit of context. If you can go on to a daily on that or a 4 hour, I don't know if you've got it marked, the fib for the year thus far.
Yeah.
Yeah. So when what are we, 200 pips off the 38.2? There's still, this in these terms, longer terms, and the euros, even more marked, it's like 400 pips away still from its 38.2. The context of these moves, it's a big move off the high, but in the context of the year's trend, it's just a pullback.
Yeah.
And you need to keep, people shouldn't be looking at these moves in the euro, cable, whatever, and this dollar strength and thinking, oh, this is going to drop all the way down 700 pips. You've got to keep an eye on your trends.
But
okay.
Yeah, go ahead. And
I was going to say, cable already tested the 38.2.
Not for the start.
Yeah, and that was a strong bounce all the way back towards the highs, but it couldn't take out those highs. So can we go back down? Yes, we can. But there's a lot of work still to be done, particularly in something like the euro, which, as I say, still 425 pips off of its 38.2 at the moment in the euro dollar. So, yeah, a lot of work to be done. Always keep a view, keep multiple views of currencies. Yeah, trade the short term, get excited, but keep an eye on the longer picture, the wider picture as well, because that has a big effect on what we're trading, as Kay's highlighting there. So
And
yeah,
and that's why I also highlighted we got the 133.65 there, but I also highlighted the 133.90 because that's the other one. That's a 23.6. So
yeah,
I mean, this, if you zoom back in, then we zoom back in, then you see this little zone here. The green line is actually there, and we've also
yeah,
traded it. That's why I'm saying, like, this zone here is should be relatively important as well. In the shorter term, perhaps the longer term is rather here, but in the shorter term, perhaps if we already manage to retake it, that means that we are still just making corrections, right? Or range trading, because there's something
yeah,
funny, and while we're on it, there's something funny, and I was um, talking about that in our room this morning as well. If you look at euro dollar, and you just put two simple lines on there, this one and this one, okay? And let me just perhaps, just for the sake of what seeing them clearly, since June, end of June, July, we had this range here, and we're still inside, right? Two excursions, one to the downside, one to the top side. But still, we're coming back in the range. So to add to what Ryan said, we're still not breaking new ground. Okay. Yes, the dollar is doing a lot better right now versus everything, but we're still not breaking new ground, right?
yeah. Again, absolutely. You always need that longer view, wider view context, because I know a lot of traders get sucked into the short term, and it's like the old saying: you don't see the wood for the trees.
Hmm. Alrighty.
Yeah, thank you very much, mate. Good stuff as always, and thank you everyone for coming to the Flow Show this week. Hope you enjoyed it. Hope we kept you in the loop and kept the trading going for you. Have a wonderful weekend, everybody. Stay safe. Take care. We'll see you all on Monday.